Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the senior investment strategist over at ewotrading.com. And we are in the heart of earnings season this week. We have lots of companies to discuss today, but we're also going to take a look at a trade idea that I gave out last week on GE Vernova. This trade was yet another winner. So you're going to want to hang around and find out how we did there on GE. And the interesting thing about this month of January is that we've only had so far one full week of trading. Okay. All the other weeks in January have been interrupted by holidays, or we did have a national day of mourning here in the US for a former president who passed away. But outside of that, this week, the last week in January, is the last full week of trading. It's the second full week of trading, and there's only been two this month, so 5 full days of trading, and we are packed with over 411 companies that are declaring earnings this week. We're focused on about 86 of those companies, and I've got a hot list for you to take a look at. So stick around. You're going to want to see this show today because we're in full stride here with earnings season. All right, we are going to jump right into it, and let's take a look at our sheet for this week. Our sheet is a little different. We break down stocks' estimated moves, so we don't just talk about earnings and the boring stuff of the analysts predict this beat or this miss or whatever. No, we talk about what option market makers, what traders are pricing into the options that are estimating the move of the market or the move of an individual stock. And you will not believe, it's kind of like Vegas. They know what they are doing. And it's amazing how many times they are right, or the market exceeds their expectations or misses their expectations, but they're usually pretty darn close. So as we look at our sheet here, you can see some big names starting off the bat here. This morning we had a couple of earnings. We'll talk about one or two of these. For example, AT&T had earnings, but this sheet is broken up into two parts. Okay, so on the left-hand side are stocks that we estimate are going to break out, have moves greater than 10%, and then on the right side of the sheet, these are stocks that are the market makers feel are going to be relatively quiet. They're only going to move approximately single digits. All right. And surprisingly, you got stocks like on there like Microsoft and Apple. What? Those only move a few percentage points these days? Yeah, they do. There was a day when these were big breakout movers, but not anymore. These are big companies, and it does take a lot to move these. So let's start with quiet stocks. All right, let's see what one of these looks like. I have an example for you here. This is Yum Brands. Okay, this is a historical chart. It is one that I like to highlight as an example of a stock that's consistently quiet through the earnings cycle. I have those identified by the vertical red lines and then the ellipse of the price move. And you can see, yes, there might be a little gap there, but it's only moving 2-3%. Okay. The stock has been stuck in a 4% trading range over the past earnings cycles when this snapshot was taken. So this is a prime example of a stock that just doesn't move very much. So let's jump right into our quiet list and kind of take a look here. And we'll begin with AT&T. If we pull up my chart here, you'll see something very interesting. You'll see that AT&T had earnings this morning, okay, before market open. The estimated move was just a little over 5%. And look where AT&T is trading. Well, it just ticked up. Okay, it's been trading up about 5% all day. It just ticked up right to 6%. We'll see where it settles out, but I would not be surprised if AT&T closed up maybe 5.9, 5.8% today, which is right where the market makers were pricing this stock for the move. So if you were looking for this stock to really break out, I mean, it looks like it gapped higher and was a big move. No, in the sense of options trading, this is a quiet move. Okay, up 6%, single digits, not a big deal. But AT&T moved higher based upon new signups, people upgrading their phones and signing up for new contracts. So big move there, and you can see we're hovering right around that 6% move. Let's move through our list here. I wanted to highlight Starbucks. Starbucks will announce on Tuesday, all right, the 28th of January. So that's tomorrow after market close. The estimated move here is about 6%. Now, you might look at this and go, man, this stock has moved from about $87 to $100. You know, why would I want to do some strategy that is quiet? Okay. So what we do here is we sell premium. So we use strategies where we take in a credit. All right. We'd never do this naked. We don't sell naked options. So we do strategies such as condors, iron condors, butterflies, etc., on these types of stocks. And I'm just looking for that earnings move itself. So I'm doing very short term trades and putting these around these quiet stocks that are expected to move only single digits. We do this in one of our publications called Delta Neutral Income, and it's just a regular process. And I'll show you how we did on one of those trades. That was our trade last week, was on a quiet stock, and I'll show you how we did here in just a moment. Okay, next on our list is going to be Boeing. All right. Again, we have excuse me, didn't mean to jerk that. All right, so Boeing has earnings on Tuesday, the 28th, before market open. So tomorrow morning has a estimated move less than 6%. All right, so again, even though the stock has rallied, look at this big rally for Boeing off of its lows. Let's look at last time I have the earnings results here. They had an estimated move less than 6%, and the stock only moved on earnings 1.7%. Okay, so even though the stock for over the course of a couple of weeks can move big, through the actual earnings event, it's usually pretty quiet. All right, next on our list to watch is Microsoft. Now you can see that it moved pretty big today. It's trading down about 3%. Okay, but that wasn't earnings. Earnings aren't until Wednesday. They're on the 29th, Wednesday the 29th, after market close, and the expected move is less than 3%. And you can see now, even today, with bad news on the chip makers and AI today, tech stocks are selling off. All right, even with that, the stocks only moved 3% today. So we could see maybe 2-3% moves this week, but I would still do a premium selling strategy going into that earnings announcement if I can get the pricing. Okay, oftentimes I can get pricing where the stock would have to move 10% when the estimated move is only 6. All right, and that is how we do that, and I'll show you an example of that here in just a moment. The last earnings cycle, okay, back in October, the stock had an average move of 3%, but it did exceed the estimated move. Okay, that was a case where it did exceed the estimated move, but that was one time in the last 6. Okay, one time in the last 6. So we're sticking with the with the market makers and looking at this being a pretty quiet return. Now, the recent news could cause some volatility, so I might be a little cautious there. Now, interestingly enough, Apple, take a look at Apple today. Okay, it's up over 2.5% today, but they will have earnings on Thursday, January 30th, after market close for Apple. The estimated move here is less than 4%. All right, so the actual move for Apple, even though it's gone from 260 down to 220 in about 3 weeks. All right, we're not worried about a 3-week trend. We're only in this trade for a couple of days at most. All right, and we're focused on that earnings event and how the stock moves through that earnings event. All right, so another quiet stock for Apple there. And then our final quiet stock for today is going to be on ExxonMobil, all right, that we're looking at. Now, Exxon, again, big energy company. As you can see, the stock has had quite a bit of volatility here, bouncing up and down, highs up here above 125, lows around 105. Good stock to actually apply a collar if you like owning stock. Be sure you collar this type of stock. But again, We're only worried about earnings. Okay. And the earnings this week on Friday, January 31st, before market open, we have an expected move, an estimated move of less than 4%. Okay. In fact, Exxon usually is really quiet through earnings. So if you can get the pricing and get a trade off to where maybe your break evens are around 5% away, maybe 6 or 7% away, that's a high probability trade. All right. And that's where we put the, um, we put the, um, um, we put the odds on our side. Okay. We're looking to create odds that are in our favor. And that's one way to do it. All right. So now let's jump over to the kind of the exciting part of the ledger. All right. Let's take a look at stocks that tend to break out. And these are stocks that are usually big movers, moving over 10%. All right. If we take a look at that list, here for our earnings week this week. Well, you can see here is an example. All right. This is Shopify. This is an example of a stock that breaks up. And I show this each week just as an example so you can see visually the statistical movement or historical movement of the stock. And you can see these big gaps. They're identified, each one of these is earnings. And you can see that this is just one of the stocks that we like to trade around earnings. Now, Shopify does not have earnings this week. This is just an example. All right, so let's go ahead and take a look at our list for this week because it's full of some familiar names. We're going to dive in. Let's go ahead and as you look at that list there briefly, you can pause this when you look at the recording of it, but we're going to jump right into the charts. Let's begin with Sofi this morning. Sofi was first on our list here. And look at this. They declared this morning the estimated move was 11%. And you can see the stock is off its lows, but look what it's done. You can see the live ticker up top. Stock is down 10.4%. But you can see in the candle, the little wick here, excuse me, that the stock was trading down over 11% this morning. So far, keeping in line with market makers' predictions of an 11% move. And sure enough, it's down. It's heading right back down there, 10.6 now, 10.5. All right. So wouldn't be surprised if it did close down there towards the 11%. That's just an example again where the market makers, just like the odds makers in Vegas, the market makers know their stuff. And that's why we pay attention to option pricing and all the Greeks, including implied volatility on options. So another good example here is going to be on F5 Networks. F5, the symbol is FFIV. They will declare earnings on Tuesday, January 28th, after market close. The estimated move here is greater than 13%. All right. So we're expecting a big move. As you can see, the stock is down about 4% today, but we're expecting a much bigger move for F5 later this week when they do declare earnings. And again, they come Tuesday after market close. All right. Next on our list is Meta. Meta is showing a little volatility today, is now up. Meta started trading lower today and then now has rallied. They will have earnings on Wednesday, January 29th, after market close. The estimated move here is a little greater than 13%. All right, so then we have Deckers. Deckers Outdoors is always on our list. All right, they have an estimated move of 15%, trading over 15% through the earnings event. They have earnings on Thursday, January 30th, after market close. So big period of window there, Wednesday and Thursday, with a lot of big names coming out. And these are some of the big movers that we're going through right now. Deckers declares Thursday, January 30th, after market close, the estimated move greater than 15%. All right. Now, Intel also will declare on Thursday, January 30th, after market close. And you can see this stock's had a little bit of volatility here. The estimated move here is greater than 12%. All right. So the stock, even though it's been gapping around, They don't have earnings until Thursday. And again, we see a double-digit move for Intel that's being priced in right now, greater than 12%. Now, two more to go here. We have United Parcel Service. Now, this one, look at this. Boy, UPS is really taking off today, up 2.2%. This will have UPS will have earnings on Thursday, January 30th, before market open. Okay, before market open on Thursday. The estimated move here is greater than 10%. One of the reasons I like trading UPS, especially this time of year, is because we start get a taste of what their results were for going into Christmas last year, and what type of demand they had. That can usually cause quite a bit of volatility, because then they will also produce their outlook for the year and combine those two together, and you can usually get a double-digit move out of UPS, and that's what's being priced in right now, just over a 10% potential move for the stock. And finally, on Friday, the last stock we're going to talk about here is Charter Communications, or Charter Technologies here. Charter will have its earnings on Friday, the 31st. Can you believe it? We're almost done with the month here, the month of January. It's been flying by. They will announce before market open on Friday. The estimated move, believe it or not, here is 16%, greater than 16%. Now, this is a $360 stock. Look at this, 367 and change, 367 half on the bid right now. This is who knew? And this was up over $400 not too long ago. Okay, for Charter. So this stock, as you can see, look at this back here in these moves here. All right, so this stock can move, and we are looking for a move greater than 16% through earnings. Okay, big potential mover. So I'll put the list up for you one more time, the complete list, so you can pause and take a look at it as you're watching the video. But we have Blackstone, U.S. Steel. They have to declare this week. That's on the quiet list. We have VF Corporation and Brinker International. Brinker, owns Chili's and I believe Massimo's and some other companies or restaurants. So T-Mobile, Progressive Insurance, you always see their commercials. All right, they have earnings on Wednesday. So lots of big names this week. And that's key, because the big names are going to keep coming at us over the next couple of weeks. So be sure you tune back in each and every week. Now, since we go through so many stocks every week, we do have the chapter feature at the bottom of the video that you can jump to each one as we talk about it for a few minutes each and every week. So be sure to take advantage of that if you don't want to watch the whole video, but we will always appreciate when you do, and especially if you like and subscribe. So come back to us each and every week. So with that, let's get into last week's trade. All right. Last week we did a trade on GE Vernova. All right. So GEV is the symbol. All right. Now this is pretty interesting here for this stock. All right. As you can see, the stock was, as we call this in the market, catching a bid. This stock was racing higher. All right. And I wasn't too concerned about that, right? Because again, we're just doing earnings. Earnings was approximately in about a day before market open. Okay. We were using options that expired at the end of the week. Okay. So we were within just 3 days of the options expiring. Earnings were in one day, okay, to give you an idea. So let's see how the trade did. Well, through earnings, the stock popped up, okay, through earnings. All right, stock popped up, but it got right up to our upper break even. And look what happened on Friday. Okay, so Wednesday, after, before market open, the stock gapped up. Thursday, the stock actually ticked higher, challenged our upper break even. But then on Friday, look at this, the stock shot down lower, closed down almost 4% on the day. And that was right in the upper portion of our risk graph and our profit zone, we were able to keep the entire, I believe it was $150 credit. That's per spread that we did. Okay. $150 profit. And it is based upon a hypothetical $10,000 account. That's a 1.5% return on portfolio in just 3 days. Okay. In just 3 days, you increased your portfolio by 1.5%. You annualize that out, that's a pretty darn good return on investment on a portfolio base on an annualized basis. And we do these almost each and every week, just knocking these out, knocking these out, knocking these out. All right. So we're back on the winning track here. That was a 42% return on risk or a 1.5% return on portfolio. And that was $150 per spread. All right. So let's get into our trade for this week. All right. And as you might guess, it would be on a big potential high flyer, and that would be on Decker's Outdoor. I'm looking at doing a strangle here. Now, there is a catch on Decker's. Because this is a $200 stock, the trades on Decker's are often more expensive than usual. And the trade here will be that I would say you probably need a 25 or $30,000 account to trade this. All right, but this would be a strangle on Nvidia. The strangles I saw going off for around $1,600 on that. So that is what you would expect there on for Deckers. All right, it was about $1,600 per strangle. But again, we're looking for a big potential move for the stock. So keep your eye out on Deckers Outdoors for this week. And they have earnings. Once again, they have earnings coming up here on Thursday after market close. So we'll probably look to close out maybe as early as Friday. If not, then on Monday we'll update this and see where we're trading. We might stay in it if we haven't quite reached one of our break evens. But that is why you want to come back each and every week, and we will update you on the progress of all of our trades that we put out. So be sure to like and subscribe to us. Come back each and every week. You can download this free guide that appears here on the bottom third of the video here at ewotrader.com/straddle. I'll teach you all about how we do these trades, and I put it all out there for you to look at and enjoy. But we do these trades in our service called Delta Neutral Breakout, and that is where the high flyers go, is into that publication. So everybody have a great trading week, and I will talk to you again next Monday. Take care.